Welcome everyone to top 5 misconceptions in today's real estate industry. I'm going to start off by just asking you, Katie, for those who maybe don't know you, to give us just a quick bio of who you are.
Fantastic. Thanks again for having me today. I'm Katy Mackenzie. I'm a mortgage professional with TMG, the Mortgage Group. I have been in the mortgage industry since '99, so I started when I was two. But I have a wealth of knowledge. I worked at a bank as well as now in the broker industry. So I've got a background of breadth and depth of mortgage information and knowledge, and I have yet to see it all, but I could say I've helped a number of clients all over BC and traveling into other provinces as well.
Awesome. Yeah, and just like you'd say, like we'll never see it all because everything's changing every day.
Yeah, that's true.
But I did want to have this do this webinar now because our market seems to be shifting a bit. In that, definitely on Vancouver Island, and I've heard from colleagues on the mainland and even as far as Ontario that we are seeing a lot more buyers come out now. Now that things have stabilized a bit in regards to the interest rate increases, so people who were maybe sitting back a little bit are kind of feeling a bit more confident. If they've got to buy, then they're coming out. And we're seeing multiple offers on on right properties. So I think it's important time to kind of give people a little bit of a refresh, as well as just currently, where things are at in this time, with like we've said about just so much information coming in, from all over the place. Let's talk to the expert and let her tell us about some misconceptions, if you're just getting into to buying real estate.
Yeah.
So we're
Yeah, I
just
was
going to.
thinking about that this morning. It's kind of ironic that there is, a flood of information on social media, and here we are also providing information. But as you say, it's coming from an expert, a licensed professional who is there to provide that information. So, it's like going to your doctor to ask about the doctor things and going to
Exactly.
your dentist to ask about your teeth. You're asking the right individual the right questions.
Exactly. Going right to the source.
Yeah.
So we're going to get into it. So we've got our top 5 that Katie's come up with that she and myself often in our industry.
Yeah.
Um, Definitely stick around to hear our 5th topic. I'm just going to give a little bit of a little teaser here. It's talking about interest rates, and maybe the lowest rate is not always the best rate. So really important information. So I'm going to let Katie, you get started with our first of our top 5 misconceptions in today's mortgage industry.
Great. Thank you. The first one I wanted to start with is that most online calculators won't actually calculate what you actually qualify for. And the reason for this, again, is because you, as the buyer, are not the expert. So the concept of garbage in and garbage out, if you're not putting in the right numbers, i.e., the right income, the right debt payments, the right associated expenses to the property, which you don't even have yet. So you might put in the wrong taxes or the wrong strata fees. If you're not putting in the right debt payment amounts, different lenders calculate debt repayment on different types of debt differently. So if you're putting the wrong numbers in, you're going to get the wrong numbers out. And where most people go wrong, again, is the expenses of the property as well as the interest rate. People use the actual interest rate instead of the stress test rate or the rate at which our government requires us to use.
Yeah.
What I found in looking at online calculators as well is there's sort of it's not a bait and switch, but it's sort of a launch pad to get you somewhere else. So let's say you're in your online banking system and it says, let's qualify you for a mortgage. While you're here, open up X, Y, and Z products.
Right.
So it's not just a landing page with calculations that goes nowhere else. It's most often somewhere that's leading you into another realm to purchase something else. So
Right.
a number of mortgage professionals that I know are working with Canadian Mortgage app, which is an app designed for mortgage brokers,
Mhm.
specifically just for their clients to use. So it doesn't travel anywhere else.
Mhm.
It does everything possible. It's my most favorite app that I use every single day.
Yes.
Um, but again, just be careful because most of those calculators aren't working in terms of giving you an accurate number. It's an okay place to start, but don't rely on that to go shopping.
Yeah. Okay, that's good point. So I've made a note. We'll make sure that we link your Canadian Mortgage app in when we repost this information, so people can use
Yeah.
a proper one.
Yeah.
Yeah. Um, so
Great.
online calculator. First one, online calculators were debunked. What do you have for our second point, Katie?
Next one. What I earn is what I can use to qualify for a mortgage. So this happens all the time. I make 100 grand a year.
Mhm.
Well, based on the documents we've provided, the lenders can only actually use 80,000 of that income. So what you earn may be what you earn, but
Mhm.
it may not be what the lenders are using for income.
Mhm.
So quite often we see this when you're self-employed
Mhm.
and you're a sole proprietor. So you make 100 grand a year, but you have your allowable write-offs. So you're using a net income
Mhm.
to actually qualify. There are lenders that do gross ups and add backs, so on and so forth. But again, when you're entering that 100 grand into the mortgage calculator, you may not be using the right number.
Mhm.
Also, they'll use an average of income if it's increasing. But if you have an off year, such as 2020,
Mhm.
then lenders were looking at using a 3 year average, whether or not it was increasing, because they knew there was an anomaly year there.
Sure.
Um, if you're hourly and bonused, depending on how the hours are calculated or clawed back for time off, we may also be looking at a 2 year average and ensuring that your current year is on track. So you might say, oh, Katie, last year I made $90,000, but this year, your year to date, if we annualized it, is only on track for 50. Well,
Mhm.
the lender might only then use 50.
Mhm.
So again, in your mind, you have a set number of what you earn, and that may be factual, but as it nets out for a lender, it could be very different. And again, then throwing off the calculator
Yeah.
completely.
Which makes me think of rental income, for example. Like if you have a suite in your house that you're renting out and you think, oh, I can use that $1,500 a month income added. That's not the case, correct?
Typically, you can use 50%. Some lenders will include more.
Okay.
But as it relates to a mortgage helper or a benefit for you from a cash flow perspective, yes, it has that full 1,500 value. But
Mhm.
from a lender perspective, assume we're only including 50% of it. So
Yeah. Yeah.
very much so. Yeah, you might do your math. Am I covering my costs associated with my investment property, or how much more of a mortgage can I qualify for with a rental suite? And again, it varies lender to lender. So you have to be careful there too.
Yeah. Again, going back to the first point, garbage in, garbage out.
Yeah.
Okay. Third topic. What do you have to tell me about banks?
Ah, so there's this great conversation around broker versus bank. And, we hear a lot of people say, oh, I deal with my banker, they're great. I'll just work with them. I did do 15 years with a major bank, and I was a young individual straight out of university, sitting there helping you with your mortgage. But typically, and I know this from when I left, the mandate within the banking system is for cross sell. So the person sitting with you is not licensed.
Mhm.
So there's little to no recourse other than going to the top of the bank's complaint system if something goes sideways. They're not licensed. Therefore, they're also not independent and objective. They're offering you their product because they work for their bank.
Right.
And they're going to tell you it's great. Now, it may be the best option,
Mhm.
but how do you know if that individual hasn't even looked anywhere else?
Yeah.
So we may agree with them. Yeah, here's where you're going to go. It's the best. But, I've even seen two of our major bank lenders in the broker channel shift You know, right now, if you're banking with one, you don't want to be doing mortgages with them because their rates are way higher than the other major bank that we can get really low rates with. So um, I think the biggest thing there is they're not licensed again, so they're not independent and objective. They can't say, I'm recommending this product for you as a solution for your financing needs because it's the best for you, all things considered. They
Right.
can't do that. They're offering the product that they have.
Yeah.
And again, they may do a great job, but I just think if you can have access to that as well as 25 other lenders, you know, why not go to the person who can do that resourcing for you and determine which one actually is the best?
Yeah.
What
Exactly.
else did I write down? Cross sell. They're experts in nothing because again, they have to learn all their products, so they're sort of an expert in nothing.
Yes.
I just don't. You wouldn't do that again with a doctor or a dentist
Yeah.
that's going to take a tooth out. You're going to go with someone who specializes in doing that specific procedure.
Yeah. And I understand. I mean, I've banked with TD my entire life and I feel really confident with the banking products that they've given me, but I've never held a mortgage with them because, I went to the broker and they were able to look at all options and find, and it was another big bank that we're with, but has the right products that work with our situation.
Yeah.
So
Yeah.
great point. Great point. Thank you.
Yeah.
So this is an interesting, this next one that you told me about. The misconception that all brokers are created equal.
Mhm.
Yeah, so tell me a little about that.
But just like in any profession, you're going to get great people and not so great people. And what we're seeing is a widening gap. So for a client, it can be pretty obvious, broker to broker, who they feel like they're going to use and feel like they may not use. But aside from that, the broker and the brokerage that they have behind them is a key consideration.
Mhm.
So again, when I say I'm independent and objective, it's because our brokerage pools our lending pools. That doesn't make any sense. We pool our money together as a brokerage, meaning I don't have to submit 40 million each year to Scotia to get Scotia's best rates, and then 40 million to TD to get TD's best rates.
Right.
We pay a little bit more to our brokerage, and our brokerage commits the volume.
Mhm.
Therefore, I know I can access best rates right out the gate.
Mhm. Mhm.
That's important because you may have someone saying, oh, let's go to TD because you bank there, you like it there, but that may be because they're trying to fill that bucket to then get better rates with that lender.
Sure. Okay.
So again, even when you're working with a broker, it's good for them to explain why they've chosen one lender over another lender and to provide, say, 3 solutions. Now, for some people, you may only have one choice of lender because that's where you're pigeonholed because of a credit issue or past bankruptcy or the product specific, the
Mhm.
property itself.
Mhm.
You may end up with a specific lender for a specific reason.
Mhm.
But some lenders too have just more breadth and depth of knowledge and experience,
Yeah.
right? Some people just do first time home buyers and haven't dealt with, a professional with an operating company, a holding company, and flow through of income and how it's calculated. And it's just, wow, I can't deal with that. Or
Sure.
clients that hold multiple real estate
Yeah.
portfolios in holdcos as well as personal names, primary, business, and rentals. So I think working with someone who has an independent license as a mortgage broker over the bank is important, as well as then somebody with that type of experience. And you'll know that by looking at them online and seeing what they've done,
Yeah.
and in conversation with them too,
Yeah.
in interviewing them to see if you'd like to work with them.
Yeah, exactly. Yeah, just having that initial chat. I mean, it's totally fine. Like just with working with a realtor, you can chat with various realtors and find the one that maybe you think is going to best suit you.
Yeah. Yeah.
Awesome. Okay. And so number 5 here, this is a big one. The lowest rate is the best rate.
Yes.
You say.
Misconception 101, because any of the low rates you see online are insured rates.
Yeah.
meaning you have less than 20% down payment
Mhm.
and you're paying an insurance premium to access the lower rate.
Mhm.
Net it out and do the calculation of total interest and premium paid, and you're actually paying more.
Mhm. Yeah.
So when you see, you're walking past a branch or you're seeing something posted online, those are always insured rates.
Mhm.
And those are not rates that everyone can access,
Mhm.
for one. And for two, when you show them the math between putting 19.99% down versus 20% down to get the lower rate,
Mhm.
they realize that they're paying more interest overall.
Right.
Second to that, it usually means if they're, say, uninsured rates, the lower rate may come with restrictive covenants.
Sure.
You may not have portability. You may not be able to take that mortgage to another property if you move. I had clients that moved from Vancouver to Victoria and they couldn't port the mortgage, but they wanted that low rate with that lender at the time. And they knew that they still chose to take it and then had to pay a penalty.
Yeah.
So it may not be portable. It may not be assumable. You may not be able to refinance it
Yeah.
prior to the end of your term
Mhm.
or upon sale or death.
Mhm.
You may not be able to make extra payments,
Mhm.
or the penalty on the back end when you pay out might be significantly higher.
Mhm.
So if you're okay with some of these things, the lower rate may be attractive.
Mhm.
And a lot of people say, it's okay, it doesn't matter, it doesn't matter. And then something occurs and they're like, oh, I should have taken the other one.
Yeah.
I always say just, have a look at the fine print,
Yeah.
because it's usually, size 4 font and then it's size 40 font in the rate.
Yeah.
But just know all the terms and conditions that come with it. So
Yeah.
you know what your overall cost of borrowing is.
Yeah. Yeah. And yeah,
Yeah.
even if, yeah, everyone's lives change. So maybe these terms maybe don't mean something to you right now, but they could in the future. So it's important to know, just give yourself a little bit of flexibility. Like you said, maybe
Mhm.
you don't think you're going to move in a couple of years, but then you have to, and now you can't port your mortgage. It's just really important to understand what all that fine print is.
Right now, too, based on the yield curve, the 5-year term is the best rate. So people will say, well, I want the lowest rate. And I'll say, okay, well, it's a 5-year term. Well, I only want a 3-year term because what if rates are lower?
Mhm.
Okay, well, a 3-year term is a higher rate. So there's a really good example and a
Yeah.
conversation that happens every single day right now.
Yeah. 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 I hear that.
Yeah.
Okay, awesome. Well, Katie, those are five great topics, but I think you've got one more that you're going to tell us today as a little bit of a bonus, right?
Yeah, this was one that's come up this week as well. The bonus, the credit rating scoring systems that you see on your online banking don't represent your actual Equifax credit rating, which we use for your mortgage application.
Yeah.
And I've seen the difference in score be about 200 points, meaning you could think you're above a line to be able to get a mortgage or get a better rate on your mortgage, but you're actually below that line. So it's
Hmm.
really important to access your credit bureau via Equifax
Hmm.
and or TransUnion, which is where we source. It's again another vehicle for your online banking system to
Hmm.
get you online, look at my score, and try it. Go in there. I guarantee you there's a cross sell on the right side, right beside it, or the left side, right beside it,
Yeah.
to try and get you to buy more product with them.
Yeah.
So they offer it, but just be cautious around it. If you're rebuilding credit, if your credit is great, it's not really an issue. But if
Hmm.
your credit's being rebuilt or you've had a recent issue, could be a problem.
Yeah. Yeah. And if you're really relying on what you're looking at on the site. So I think the main the overall main picture of these misconceptions is just making sure that you're getting your information from the experts, and don't be afraid to reach out and ask people questions. I know that you, as a realtor, you're a great resource for me. If you follow Katie online, she's constantly posting updated information in the ever-changing industry. So if getting into real estate, or if you're already in real estate and you want to be kept up to date, it's so helpful. I mean, Katie puts out a lot of great content, not even just mortgage stuff. If you like animals, she's always got her sweet dog on there, so it makes it exciting to watch too.
He hasn't barked once during our Zoom, which is great. He,
Right
he
on.
hates he hates the Amazon drivers. Just
Yeah, I put my dog outside. He's basking in the sun while while I've got this recording. But those are really great, and Katie and I are going to repost this information online so everyone can see it in many different facets. Um, but that's perfect. This is great information. Thank you, Katie. Do you have any last words?
No, I think what you said is if you have a question, please reach out. I know there's a fear around, well, I don't want to bother you. I'm not really ready to start yet. I don't know who I'm gonna work with.
Hmm.
Make sure your questions are answered because it's the largest purchase you may ever make, shy of, say, a business. So it's important. Like you're valuable. Your questions are valuable,
Yeah,
and then it spurs us on to create content like this because we get the same questions all the time.
yeah,
So you're not alone in it, but you have to have those questions answered.
yeah.
Remove the barriers to purchasing.
Yeah.
Yeah.
I mean, the best thing we can do when we're making one of the largest financial transactions of our life is be educated. So I'm so glad to have you on here helping us and every day. So I guess that's it. I guess it's time to enjoy some sunshine.
Yes, for sure.
Yeah, and thank you everybody for tuning in, and looking forward to getting this out online. So enjoy your day.